Good morning, everybody. I'm Joe Neighbour, talking ball with Signal Centre. It is the 21st of April. Just me today. No Steve. He's taking a couple of days holiday, so I'm going to do my best to run through the latest headlines and what's going on the charts today. So just going to get stuck straight in. First up, we've got the political situation that's continuing in Germany. Armin Laschet, the leader of the German Conservative, won the nomination to lead his party into the September elections. A fresh poll suggested that the bloc is quickly losing its dominance of German politics. Talk about a coalition being formed with the Green Party because they made some significant gains as well, gaining 5 points to 28%. So we'll wait and see what happens there over the coming weeks and months. In terms of the vaccine, Johnson & Johnson will start shipments of its vaccine to the European Union after the bloc's drug regulator said the benefits of the shot outweigh the risks of the possible link with a case of rare blood clots. So it's a similar situation to what we saw with AstraZeneca. In terms of what's going on in the States, the former Minneapolis police officer Derek Chauvin was found guilty of killing George Floyd after he knelt on the man's neck for over 9 minutes. Obviously, that ignited a summer of rage and finally some justice for the people out in the United States. So that's good news. In terms of the European Soccer League, that appears to have crumbled after just 48 hours with everybody backtracking and left with a significant amount of egg on their face. So I guess there'll be more fallout from that over the coming hours as well. Not that it's got any real impact in what's going on in financial markets. But let's get over to the charts then and start running through what's happening there. There was quite a significant move in a number of markets yesterday of note. So first of all, I want to start with the FX side of things, and particularly dollar index. We've been talking about this corrective move lower. It's been pretty sharp, but as you can see here, we did see some buyers step in yesterday just in front of this 61.8% Fibonacci level from these lows down here to these highs up here. From that, we've seen a decent-ish looking turnaround. Now, if we can start breaking out above this corrective channel, this bearish channel, then that may lead to a continuation higher. And obviously, there was a flood of money going into the dollar index because what we saw elsewhere was selling in the likes of the stock indices. Which are generally a measure of risk. If they're moving up, then people are obviously feeling good about markets and are happy to speculate or take more risk in markets. And when they start to fall, we start to see people shift towards safer haven assets like the dollar index. So that's quite interesting. So if we look at what happened with euro dollar, on the flip side of that, again, it's trading in this corrective channel higher, posted a pretty significant reversal candle yesterday, bang into this resistance level here that we've got on the daily chart, the 61.8% level at 1.2037. So we've gone all the way up here before rejecting and closing back below that resistance level. And then we're following it up today with some more selling. Now, if we can break out of this channel, then we'll be looking for a continuation lower towards the support level that we've got at 116.95. So looking as though we're going to remain within a corrective channel here on euro dollar. Now, as I've crudely drawn on in the last few videos, I think maybe what's happening is that we are forming a bit of a top pattern here in euro dollar. It is quite early to call that. Ideally, what we need to do is break the neckline, which is somewhere around here. Apologies for these horrible drawings, but hopefully you get the picture of what I'm trying to get across here. Looking at some of the other currencies like Aussie dollar, for instance, because that's often a pair that's associated with risk. If that's moving higher, then things are generally pretty good all round in markets, and we can expect dollar index to continue lower. But what we saw yesterday, again, really big turnaround. So we've gone up to make new highs on the session and actually closed below the open of the previous session. So not quite an outside candle, but fair amount of engulfing's gone on there today, which is not a great sign. So therefore we could see a continuation lower there. The other pair that I quite liked was Aussie Yen. This has been trading in a bit of a wedge, but if you look again yesterday, we saw a big move to the upside, breaking above these resistance levels here at 84.48 before rejecting it and closing below the low of the previous session. So that's a really negative looking candle and should suggest that we are going to see further prices to the downside on that pair. Cable was quite interesting as well. This was the gun to the head trade for myself yesterday. So what we've got here on the daily chart is this big bullish channel. We saw a break of that channel back on the 24th of March. We saw a retest of the underside of it on the 6th of April. And again, we've seen another retest of the underside of this, although obviously a lot higher up, yesterday on the 20th of April, and that rejected. So that resistance level there at 140005 worked really nicely, and we are seeing a bit of a continuation lower with that today. So quite interesting there as well. Looking for sort of dollar strength, this is one that's sort of increasingly coming on my radar, which is dollar CAD. So if we go back on this one, you'll see this big wedge pattern that's formed, and this is going back to March last year. So we have formed this big wedge, and it's becoming narrower and narrower, and what we're looking for now is a break to the upside. And when we get the breaks of these narrow wedges, they can create quite explosive moves to the upside. So in recent sessions, it has been sort of chopping around a little bit. I've drawn this level on here at 126.43 as being the sort of key level that I think needs to be overcome before we can safely say that this wedge pattern or this break of the wedge has complete. Now, yesterday's candle, very bullish indeed. We are, close significantly higher on the session. So coming very close to testing this level, and if we can break above that, then I think we could see a fairly substantial corrective move to the upside to around 132.46. Again, a lot of this will be dependent on what happens with the dollar index in the very short term, but that's one market that I think is worthwhile keeping an eye on. Obviously there are significant links to the oil price with the Canadian dollar, so worth keeping an eye on that as well, which I'll come on to next. So oil, interesting session yesterday. This is the bullish channel that we've been trading in since November. What I'm noticing increasingly, not just in oil but across other markets, is that there has been a drop off in the volume in recent weeks, as you can see here. And this is kind of, this is moving lower while this is moving higher. So what we're getting is a bit of divergence there on the chart. But if you look at what happened yesterday, then we made an attempt at overcoming this resistance level here at 63.60, and what we posted was quite a significant bearish outside day on the candle there. So we've gone on to make new highs, we've broken above the resistance level, but then we've closed below, significantly below the lows of the previous session to form this large engulfing candle. Now today price action isn't doing an awful lot, but the fears are that we are seeing COVID-19 rampage through places like India. So there's some significant concerns about the demand for oil over the coming weeks and months because of that. So this is a story that's worthwhile watching as well. Possible that we formed a little bit of a top. And as I say, the big thing I'm interested in here and concerned about is that drop off in the volume that you can see here on the chart moving lower. In terms of gold, now Steve's obviously been talking about the double bottom that's formed on this one. So we've seen this break of trend. We've seen the double bottom form here. We had a low on the 8th of March and a low on the 31st of March, and we've broken above this neckline of the double bottom here. So it looks as though we're heading higher. The measured move, so taking the low, the move here from the low to the high there, projecting it higher, comes in at 1834.6. So that is where we're looking to target. That also pretty much marries up with a 38.2% fib level at 1829. So looking as though gold is going to continue higher in the short term. Is that a safe haven move? Well, gold has been trading a bit more like a risk asset in recent months, but clearly been left behind while people have been getting very excited about what's going on in equity markets. So gold looking quite bullish at the moment. Let's have a look at what's going on with the indices. First up, we'll look at the Ftse 100, just because that's obviously our domestic market, and I understand it's not the most exciting market, but it's where I'm going to start anyway today. So we've seen a break to new highs not all-time highs, I might add, above 7,000 a couple of days ago, but we saw a fairly substantial amount of selling yesterday take shape. Now, this is the lows from October last year, so we formed a bit of a trend line. So this is a key level to watch now, I think, in and around here at 68.50. If we start to break down from here, then this could lead to a corrective move lower. And that's not saying that the outlook for equities won't remain bullish. This was the March lows that we saw last year, but we've seen this grind higher, and I think we are due a bit of a correction. So where would I be looking for? First up, probably 64.50, which is the 38.2% fib level of this move higher here. Maybe we'll get some confluence actually if we do this as well. Anything that's coming in around there? No confluence on that one, unfortunately, but there's plenty of room for a move to the downside there and things to still ultimately be bullish. But I think we are coming close potentially to a correction. This is the CAC, the French market, the top 40 stocks. Again, big reversal yesterday, bouncing back a little bit today. All eyes on this trend line. If the trend line starts to buckle, then we could see a corrective move across the board on equities. DAX is very much the same, although there's a little bit of a gap down to the trend line here. But in recent days, price action has been flattening off a little bit. So arguably, you could say there is some key support around about 15,150 on the DAX today. So that looks quite interesting. Nasdaq. Well, that's still up at around all-time highs, but there's no denying in the last couple of days those candles are pretty severe. We've obviously got earnings going on in the States at the moment, and Netflix was the latest stock to disappoint. I think stock was down by about 10% after hours, after the subscription numbers fell unexpectedly. S&P 500, that still looks pretty healthy and robust. Obviously, this is the broadest index of US economic health with 500 stocks in the index. Again, no denying the fact that the last couple of days have been a bit bearish, but overall it still looks pretty healthy. And there's no reason why we couldn't see a pullback to 4,000. But ultimately, it would still look pretty bullish. But I think we would all like to see maybe a little bit of froth come off these markets to create some value for investors that are looking to get back involved into the markets or put some capital to work. So that pretty much wraps up all the charts that I've been looking at. I can now jump over to the gun to the head trades that we did yesterday. So this is obviously where Steve and I often, every day call a trade of the day, where we think we can make a few pips. Yesterday, I picked cable as my trade of the day. I was selling it at 139.85. I made 50 ticks at the 9 p.m. close, or 1.61R. Steve went short of Bitcoin and lost out 1R on that trade yesterday. So overall, we made a little bit of cash, but I'm going to come up with a new idea today. So where I wanted to have a look was Aussie US dollar. First up, this is the daily chart. So I was more interested in this reversal candle that we saw yesterday. But having a look at this now over the last hour, I'm not so sure. This was breaking down, but as you can see now, it looks like it's reversed all of that. So that's kind of ended maybe my interest in that one from a daily basis. Let's just have a quick flick through and see if there's anything that I like that we can follow up on. Clearly doing this on the fly today. Usually I have Steve waffling away, which allows me to have a quick look through the charts and come up with an idea. I want to keep it consistent with what I was mentioning in the previous look at the charts. So what have we got? Oh, it's all looking pretty rosy today. What's that, the DAX? Okay, let's have a look at DAX. So as I mentioned, that looked quite good. Plenty of room potentially to fall on that one, but it was well above the trend line, so it may never get there. So I'm going to buy this today based on the fact that we've seen this bit of reversal. We've got some support around here. I like the look of this big old candle that we formed over the last hour, so I'm going to buy it at 15,182. I'm going to target and move up to this cluster of candles up here at 15,380. and I'm going to place a stop loss below the low of the candle that we've posted over the last hour. I mean, the more sensible trade actually would probably to be putting the stop loss below these lows. So I'll do that instead actually. 15,100, targeting a 2.33R return on that one today. Yeah, that's gonna be my trade of the day. So Steve is watching. Steve, if you were available, you could have jumped on. Cool. Right. So in terms of data today, what can we look forward to? We've got quite a bit of data out from the UK. At 10:30, we've got the Bank of England Governor Bailey's speech. After that, we've got a raft of Canadian data. We've got the BOC Consumer Price Index at 12:30. Then we've got the BOC rate statement at 2 o'clock, followed by the Bank of Canada Monetary Policy Report at 2 o'clock as well. And then followed by the interest rate decision. So lots happening, and then we're backing that up with a press conference at 3:15. So if you're involved in anything Canadian dollar today, be aware there is lots of data out on that front. Cool. I think I can wrap it up there. Obviously a bit briefer today as there's no Steve, but I'll be back tomorrow. Steve's off for the rest of the week, and until then, trade safe and speak to you then. Cheers. Bye bye.